Hi, this is Deborah. I wanted to make this video today, especially for families and for singles as well. And I wanted to today talk a little bit about insurance. Now, I think there's a lot of misconceptions out there about insurance, and a lot of people don't understand the differences in the different types of insurance. And today I want to talk about one type, and that's term insurance. Now, I want to be honest with you, one of the motivations that I had for making this video today was because of a phone call that I received from one of my friends who just actually today talked with the wife who had just lost her husband this week. He was only 38 years old. There had been no long illness there. He simply told his wife that he felt bad. He wanted to lay down and rest. And unfortunately, he did not awake. Of course, she's devastated. And the sad part to this is the devastation will not end once the funeral happens, because to follow comes all the financial pressures that will be coming. They had just bought a $147,000 home, and unfortunately, he did not have insurance to help to pay that home off. She now faces that she could lose her home through foreclosure. She may have to go out and get 2 to 3 jobs to try to make the payments on that home, or she may be forced to sell her home and possibly move in with another family member or a friend. I want to explain just a little bit about term insurance, what it is, and a little bit how it works. Term insurance is simply a life insurance that remains in effect for a specified period of time, after which the coverage expires. The term could be 10 years, 20 years, 15 years, 30 years, and there's even some out there now for 50 years. Term insurance is sometimes called pure insurance, since it provides pure insurance protection that is not tied to any type of cash value. Term insurance is actually less costly than permanent insurance in the earlier years, but it may become quite costly in your later years if you choose to renew your insurance after the term period has expired. Now, one of the assets to renewal, however, is that should you in your later years develop an illness or condition that is not usually covered by an insurance company, you are usually guaranteed coverage regardless of your health by renewing the term policy that you already have. The downside to term insurance renewal is that they will actually rate your policy, or they would raise the premiums to what it would cost you at that age. Term insurance has been used for things like mortgage protection. It's been used for young families who have kids who are young, when they have the majority of the debt on them in their young and middle years, to provide to make sure that, God forbid, if anything does happen to them, that family is protected financially. I encourage you, if you are concerned about your family and want to make sure that if you do not wake up tomorrow or do not come home, that your family will not have to suffer financially, give me a call and I'll be glad to tell you all the details of it and how you can make sure that your family is protected.